Hello everyone, my name is David Varsimashvili. Are compliance regulations becoming so complex that they are killing the businesses? This compliance is no longer a side function. It's a core operational requirement. AML assessment is no longer just a regulatory requirement. It's a fundamental necessity to safeguard organizations from financial, legal, and reputational risks. Do sanctions work or not? The answer is both yes and no.
Hello, everyone, and welcome you to this amazing webinar brought to you by the Scholtes Institute. My name is Victoria Scholtes. I'm the founder, and during these webinars, we are discussing different payment, banking, compliance, fintech, innovation-related topics. And today, I've got a very, very exciting topic, which is about fintech for founders. And I'm honored to have with us today. Elliot is actually one of the founders of the biggest tech and entrepreneurship hub here in Barcelona. And he's got a lot of experience talking to different founders and startup companies of how fintech innovation is affecting their business, their lives, and obviously their decisions as well. So I think we're going to have an amazing conversation with Elliot today about entrepreneurship, fintechs, how to set up the operation, how to plan ahead when it comes to payments and banking, the importance of the education, of course. So welcome, Elliot. Thank you very much for joining us today.
Thank you, Victoria. Thank you for having me and for that kind introduction. I live, breathe, and sweat fintech, but I sort of do. So I'm always happy to come and talk about this because it's absolutely fascinating what we can do with technology in terms of improving financial services, whether you're a startup, whether you are a fintech wanting to create fintech, or whether you're a company or a finance expert but want to improve the way that you do your job using technology. There's a lot of possibilities, and I'm always happy to share.
Thank you. So tell us a bit more about yourself. First of all, how did you end up in Barcelona? How did you end up with fintech? Because I think not many people from birth, they say that I will be an expert in fintech one day when I grow up, right? So we all just end up. So what's your story?
When I was 4 years old, I had this realization I wanted to work in financial technology. So I'm originally from the United States. But I moved to Europe in 2002 to Belgium to study at an English teaching university there, studying business and economics. And I've always been interested in financial services, in finance, and the way money moves. And that led me to start my career in finance. I worked in a large bank in Brussels, a international securities depository, where I learned a lot about, the back end of how money works and how securities move and just these massive transactions that's really in the plumbing of the global financial system. For all of you who are familiar with Belgium, or if you've been to that corner of Europe, the weather is not exactly its strongest selling point. And after about 15 years there, I decided that I kind of wanted to see another part of Europe and continue to expand my career. And I was really split between, London, because that's the capital of finance in Europe, even after Brexit, or coming here to Southern Europe to not only understand what it's like down here in this part of the continent, but to enter into one of Europe's fastest growing tech hubs. And I wound up getting a job, actually, the first place I applied at a fintech here in Barcelona, one of the first fintechs that came out of the tech boom that started at the beginning of last decade. And I wound up going from working in the back office of a bank where I was on the trade floor doing transaction processing as well as product support for the product department to going into the marketing side of fintech, where I have this sort of natural ability to write for whatever reason. That was one of the gifts that I've gotten. And I was writing about technical content at a fintech that focuses on currency risk management. And it was an absolutely fascinating experience, not only because I went from a banking institution where things move slow sort of on design to a fast-paced startup, but this time there's more of a scale-up environment. After about a couple of years there, I decided to branch out on my own. I wound up, having the idea of doing my own fintech myself, but also continuing the skill set I've been building upon as a content writer in the fintech space. So I've done some work as a fintech writer, writing technical content for a lot of different fintechs. I can't really name their names, but they're in the open banking, embedded payment space, some wealth management companies, all of that, as well as building out my own startup, which focuses on financial well-being and education. At the same time, a friend of mine that I was working on a project with here in Barcelona, we realized that this is in 2021 and the heat of the pandemic. We realized that the fintech communities that existed before the pandemic in Barcelona, they had pretty much died out due to the restrictions around organizing events. And we said, hey, well, once, the pandemic is behind us, it'd be cool to try to revive that community here in Barcelona. Because for those of you who don't know, Barcelona is one of Europe's top 5 startup hubs. It's absolutely incredible how much technology and innovation happens here. But fintech, while being an important sector, isn't so big in Barcelona. It makes up only 5% of the overall startup ecosystem, and it didn't really have a voice. So my friend and I said, hey, well, wouldn't it be cool to try something? And in May of 2022, when pretty much the pandemic was behind us, we were finally able to organize a little meetup, inviting a fintech founder to join us at a co-working, letting us interview him on stage, and we ordered beer and pizza for everyone. And this just took off as there was apparently demand for this sort of event, and it's led to this wonderful project that we've created. It's the largest fintech community in Catalonia. We represent the fintechs here in Barcelona and the greater Barcelona area. We do networking events, learning events, organize workshops. We get to go speak at different fintech hubs across Europe about the fintech ecosystem here. And it's been just this wonderful experience to help me learn and to share my passion about learning, not only about financial services, but about fintech as well, with anyone who wants to know more about this exciting space.
And I think that you meet a lot of very interesting people as well, like fresh ideas, and see that how does it work for them, how it doesn't. So I think it's a good opportunity to create a safe space for everyone who talk about all of these fintech innovations, but also about the user perspective as well, bringing the users and the providers closer together, right?
Exactly. It's all about building out these networks. And Barcelona in particular is such a network-driven place. If you take Spain as a culture, the Spanish are very social. You come here, you go out, you have drinks, you network. And it's the same thing on the business side. So it's very easy to build your network here if you want to. And we saw this as an opportunity to help people who want to build their network in fintech to do exactly that.
Nice. Can you tell us a bit more about Broaden, your project, your interest, your little baby? What are you guys building with Broaden?
Sure. So I've lived abroad for a really long time, and I've also been interested in finance for a really long time, particularly learning about finance, anything related to money, banking, investing, payments, wealth management, anything around that on the retail space. It's always fascinated me. And yet there hasn't been really any push by any society, any culture to incorporate this teaching into their education system, which has created this situation where nobody really knows how money works. And this is a big problem because we all need to take care of our personal finances. Well, when you're a person living abroad, and I've lived abroad for this is my 23rd year. I'm not trying to show my age, but for a long time, you run into this extra problem where you might be integrated into the place where you've moved to. But when it comes to understanding your finances, you might not be comfortable speaking that technical language or understanding the local financial culture. What's worse is if you periodically move to different countries, well, it's very difficult to continue to build your wealth in a transparent and low cost manner, knowing that each country's system, particularly regarding retirement planning, is really siloed domestically. So it makes it very difficult to get trusted information and the resources you need to not only understand money, but to be able to build your wealth and reach your financial goals, regardless of where you come from or where you call home. So what we focus on are a few different pillars. We teach through different courses, different workshops, exclusive content, anything related to money, both basic concepts of it, as well as deep dives into local systems or technical financial products. We use an open banking service so you can aggregate all your wealth and investment accounts onto our dashboard. We have tools and research where you can ask questions to a smart chat. I don't want to use that two-letter word that everyone's using right now, but it's that. We have analysis tools where you can do financial planning on your own to really understand what that is. And again, our journey is taking us to a place where we're actually going to be able to execute those services, one step at a time. And actually, a lot of what I've learned about fintech and where I love to help other founders on this journey is understanding how you can put that order of operations together in a way that will not make you pull your hair out, but also keep you compliant and your costs low or relatively low. There's always in fintech a minimum cost threshold that you have, or floor that you just can't avoid. But there are ways to make that easier for you.
Yes, and then when we are talking about individual finances, obviously that's something that affects us in our daily lives. But when we are talking about companies' finances, even there we see that there is a lack of education, even though that payments and banking today affect every area of the organization. It affects customer journey, the customer experience, or the checkout page, or it affects how you build the product even further, integrating all of those payment methods, for example, or data security, or technological integration. Somehow these financial aspects are still not talked about enough, and people are not really discussing it enough. And on a personal level, of course, it can be very, very daunting to understand your investment, your personal finances. But people are behind companies, and when people are integrating all of these financial knowledge into their companies, maybe it's not enough. Maybe there needs to be extra knowledge about the fintechs, their use cases, and how we can actually plan for all of those payment and banking rails. But I think today what we need to talk about is how fintechs are affecting the startups, the companies, even scale ups, how you find the relevant fintechs for your business. I know that there are a lot of different benefits what fintechs can bring to a startup, such as increased engagement, revenue, and of course, improved user experience. But I'm very curious about your perspective. How do you define fintechs, and how do you think that fintechs can actually bring a lot of value to all of those companies who are just starting up, or they're just scaling up as we speak?
Oh yeah, happy to dive into that. The way I ultimately define fintech is any sort of technology that improves the financial services experience, and that goes across the board. Whether it's for end retail users, so an individual like myself facing the bank. If it's for a finance department in a company that is using financial technology to improve any of their workflows or to deal with a pain point, or if it's even inside a bank for internal processes to make their lives easier. I remember when I started in this bank in Belgium, right as I was beginning my career, before I walked in, I thought, hey, we're going to have these amazing terminals. It's going to be super modern and everything's going to be, cutting edge. Well, actually, it was these old terminal computers that it looks like, the command line in Windows or in Mac. And you're just running these basic commands. I'm like, this is completely ancient. I'm sure if I type the right code, I'll be able to play Tetris on this thing because it looked that old. And what I actually learned while I was there was prior to this technology getting implemented in the late 1970s, early 1980s, they had to do everything by hand. So if you had to input an instruction, it was literally filling out a pre-made form, checking these boxes, giving it to a colleague to verify, and then physically shipping it to another department. And I was talking to one of my much older colleagues who's about to retire, and he was telling me this was game changing. So it's really this whole idea of technology can improve financial services. That's fintech. And it's not just the sexy neobank that we see getting advertised to us or some really cool crypto product. It's really just any technology that can incrementally improve finance.
Right. So we are talking about the integrated payment providers, the treasury tools, the basically anything which is approaching the finance from a technological aspect, right? Am I right here?
Exactly. Anything in the financial services. It can be, something as mundane as improving a back office process. It can be something as cool as open banking, where you're using APIs, which is this communication medium between different software platforms to, say, share financial data from one institution to another or towards a company that wants to enrich it, making payments go faster, wealth management. Right? There's a whole world of it. I think there's something like I've counted about 17 different verticals you could put in there, from the most mundane to the broadest. And what's so cool about the way it's set up these days is that because almost everything runs through an API, you can literally plug and play different solutions, and you can effectively build and incorporate fintech solutions without having to do it yourself and with minimum disruption to your infrastructure. And that goes for anyone, whether you're a startup creating your MVP, so your minimum viable product, your first little prototype, or if you're a massive corporation and you need to improve some sort of major pain point related to one process or one part of the user journey or experience, you can quickly iterate into that or incorporate that without having to build out the entire stack by yourself, or even more crucially, have to go out and not only build the stack, but get the licenses and the permissions to do so from the regulatory authorities, which is another very important part of the equation.
Exactly. It's another whole different webinar that you need to talk about, the regulatory side. Yeah. Years even. Yeah. So let's say that I'm a startup and I want to identify opportunities to integrate fintechs and quickly build out new product features. So where do I go? How do I start? How can startups usually identify all of these opportunities to integrate these fintech innovations? What do you think?
Well, so let's just assume you're not a fintech startup. You're not trying to start a fintech. You have a platform. Well, I can't think of any business that doesn't at some point touch a payment unless they have VCs that really don't care about getting the return on their investment. Any startup, any platform is going to have at least some exposure to a financial transaction. And what you really want to start thinking about is, well, where in your user journeys, where in that product flow are your users getting stuck? If it's related to payments, this is something that you can really start to look at fintech solutions for. But this is really crucial to identify, well, what is it? Is it a payment issue? Is it related to like shopping cart abandonment? Is it related to the way that, let's say you're running a marketplace and you have, your buyers on one side transacting with the sellers on the other, and you have to intermediate that transaction. Maybe you're offering some sort of service behind it, let's say you're a property management platform and you really want to make sure the cash flows go through. And you want to really start to understand, well, A, how big of a pain point is this? B, what is this impacting in terms of the user experience and the way that is effectively impacting your user interface? And C, how can you improve this, especially in terms of cost and the user experience? And really here, you're going to start to ask yourself questions like, is this something that I can improve quickly? Is this something that maybe my current payment service provider can help me with? Or is there something I can build on top of this? And this brainstorming session is crucial because not only are you going to start to look at ways you can quickly improve this pain point using a fintech solution, but maybe there's an additional revenue opportunity there for you as well. So there's a lot of stuff you'd want to start looking at. I would always recommend, and this goes for any startup or really any company, speak to your users, ask them where their pain point is. You should always be talking to them anyways. A good product manager knows this. And then also looking at if you're an online platform or you're doing something online, when you're interacting with your customers, really look at where they're going to on your platform. There's all sorts of tools out there where you can watch what your users are doing. You can see where they're clicking, where they're stopping, their journeys within your website and within your platform. And if there's something related to payments or related to finance there, that would be a point where you want to say, maybe I can add a fintech solution to that. So it's really understanding exactly what your users are doing, and then trying to find, if it's a financial pain point, a fintech solution behind that that would match or solve that problem, or even better, also create an additional revenue stream.
Right. So let's follow that money, right? So what are those additional revenue opportunities that a fintech partner can unlock for me? Let's say that I have, just stick to your example, a marketplace, right? So obviously I can't hold funds on behalf of third parties. So I know that I need to integrate a fintech partner in case that the sellers can sell their goods, they get paid, the buyers are paying through the platform for the goods or the services. And of course, the marketplace is managing everything. So it's obvious that you need to have an embedded finance fintech partner to be present. But how can I earn on this? What is my opportunity here to actually cash out on this option too?
So I'm glad you brought up embedded finance, because I was about to go off on that, because it's such a cool concept. Embedded finance is, as it sounds, like you embed a financial product within your platform. The key tenets of embedded finance is that you're able to add things like payment accounts, which is a simplified bank account for simplicity's sake, payment cards in the sense that you can either create payment cards or you can receive payments, or both. What's really cool about this is that it really enables you to get outside of that external infrastructure that you've been using. So let's say that you're relying on your banking partner to handle the payment. So each time there's a transaction that takes place, the payment doesn't go into your own account, but it goes to your banking partner's account. And on that omnibus account, you're having to sit there and reconcile and manage all these payments between buyers and sellers. If you've worked in a corporate treasury department for anything with this sort of volume, you know exactly what I'm talking about as to how insane this can become in terms of keeping up with it. Well, the embedded finance way of doing this is actually this super cool way where you can simplify it. So instead of having one omnibus account at your banking partner and managing all of these transactions and reconciling them on your behalf, what you do is you create, for example, each seller a payment account, like a e-wallet, where each one of them can receive payments through your platform from their buyers. And that way it will go sit in this account automatically, and there'll be the ability for the money to just sit there for each segregated by itself. The users, being the sellers in this case, can quickly take the funds in and out of it. There's the ability for you to even charge some of that transaction fee that you were having to pay to your external provider. You can just wrap that into your own cost, and you can effectively not only absorb that, but even just mark it up a little bit for your customers and generate that revenue without having to pay an external bank for it. The other things that you can do, so let's say you're a seller, or like let's say a gig economy platform in this case, where you have delivery people who are doing food delivery, right? Well, it's the same concept where you're creating a wallet for each one of the drivers, and what you can do, instead of having them pay out to their own bank account, you can issue a virtual or even a physical card for them. Well, the cool thing is now that you're issuing cards on their behalf using the embedded finance provider, every time they make a payment, you can get a part of that transaction for yourself. So you're generating this additional revenue for you. It's absolutely an amazing concept. And probably more importantly, because you're sitting in the middle of all of this, you have all this financial data. And with this financial data, you can really start to observe what your users are doing. We talk about the benefits of what you can do with this sort of fintech in terms of the product development. Well, this sort of data is like gold. You can understand really where people are spending their money, because stated preferences and actual preferences is a very real thing. Our actual preferences are how we're spending our money. This is an incredibly valuable tool that you can use in embedded finance. For me, when I'm talking to people who are wanting to incorporate fintech, usually this is the first place I'd want to look. Of course, it depends on what they're doing, but this is generally the best way to generate revenue stream, the best way to start solving some of these pain points, and the best way to improve your overall value proposition.
Right. And I guess the best way to obviously cash out on your customer base as well, to utilize all of those customers or even members that you have by offering them different kind of financial product as a quasi affiliate, and in this way just be the advocate, the reseller for those financial product, and of course you can get some commission out of that or any kind of other revenue, right?
Exactly. And the cool thing is that you just touched on that is that, well, hey, you're adding value to your platform, to your value proposition. You're making your platform and your service stickier. And that means that you're going to have a lot more recurring business. You have customers, maybe even, well, if you do it right, they're like, hey, this is awesome. And they start referring to their friends and you build out this great brand reputation. And combined with this sort of organic growth that you might get out of this, you're generating extra revenue and you're making a much better case to investors. So that, let's say you want to go on another growth strategy. And again, we're not in a situation where we were 5 years ago, where money was just flying off the shelves of venture capitalists. Like you can say, hey, well, we actually have a path to profitability, which investors tend to like these days. So there's tons of value behind this. And the best part is you don't really have to go out and get a license to incorporate this. You don't have to build the infrastructure yourselves. You're using APIs to connect into their services. And while there's some compliance requirements you'll have to follow, it's not going to be the same as if you said, well, I'm going to go out and get a banking license or an electronic money license and build this myself. That would be about the worst thing you could do in terms of cost and product and, well, your mental well-being, because you'll probably want to smash your head against the wall trying to figure out the way you would do this by yourself.
And I think that there is still a lot of misconception around this, because I had a lot of clients who came to us saying that, yes, well, we want to introduce a wallet in our marketplace, an embedded kind of finance function. But that means that we are always getting rejected by payment providers because obviously we can't hold the funds. We talked to a lawyer and the lawyer said that, well, you need to have your own financial license and it costs a lot and we don't know how to start. We are just a marketplace. We are just a shoe shop, not a bank. We don't know what to do with that. So I think that there is still a lot of misconception around, do I need to become a financial institution to be able to provide these services? Or if I can piggyback on an existing financial license and resell those, but how do I find those partners? And how do I know that who are the partners that I need to work with? What are the products that I need to integrate? And I think the next question is right just about this, that for startups who are looking to launch quickly and cost effectively, what are the benefits of building under the license of an existing regulated entity versus obviously, getting the headache and become their own financial institution by themselves, running everything under the own license? And of course, we mentioned the obvious, the headache. It's a different kind of setup. But is there anything else that you think that it can just cut corners so quickly and so effectively just to work with payment partners, just to work with financial partners, then you get your own license? Or even, what's the benefit of even getting your own license?
Right. So first, what I tell founders, and I say this from experience, is you can have the best vision in the world. You can see what you want your product to be. You want to see how you're going to change the way we do business and make the world a better place, to use that cliche. But it's one step at a time, and simplicity is your best friend. Complexity is going to kill you. And no place is this more evident when we talk about financial services, because again, if you want to add a regulated service onto your platform and you're doing this directly, you are going to run up a massive bill with your lawyers. Lawyers are going to love you. So if they tell you go ahead and go for it, they're probably thinking about the fees that they're going to be making on this. It's going to take tons of time, depending on your jurisdiction. Here in Spain, things don't move as fast as they should, but it's actually pretty good for Southern Europe. But even in Northern Europe, it's very hard to find a regulator who's going to be moving quick. In other words, that means that, well, if you expect to go to market with a regulated product, you're going to be waiting at least a year before you get that license. In the meantime, what's happening, right? If you're a startup, you're an early stage startup, your goal is to move fast. Your goal is to acquire users and iterate quickly through products, iterate quickly through their feedback, fix bugs, find out the features they want to build. If you're waiting on a license from a regulator, that's going to inhibit you from doing that. Not only because you're going to have this big hold for them to give you the approval so you can launch it or get the products in place, but you're also taking your cash resources and diverting them from where you should be focusing on product and marketing and putting it towards your lawyers. And again, this is nothing against lawyers. My dad is a lawyer, but enriching them when you should be focusing on growth is a really bad strategy. So this is really where you want to think, hey, I can actually get a financial service to market much faster if I work with a regulated fintech provider. And we were talking about embedded finance. That's one way to do it. You have embedded wealth, open banking providers. Open banking is this concept where our financial data inside banks should be liberated for us to use and share with whoever we want with our consent. And this all runs over APIs and through some very cool regulations. Here in Europe, other jurisdictions have similar ones that allow this data to be shared easily. And all you have to do if you want to plug into any of these services is you go to these regulated fintech providers and you say, well, hey, I want to incorporate it. What they'll do is they'll charge you usually some sort of onboarding fee, a monthly subscription fee, and maybe a per user fee. It really depends on their business model. You sign a couple of agreements. You have a light touch compliance with them. They have obligations with the regulator, and as you as their customer, they have to respect, but you effectively get under their license. You're building underneath their license, and you don't have to worry about the full-blown cost of running your own compliance department, dealing with a regulator on a regular basis, the time that's involved with all of this. Like, you don't want to be a bank when you're maybe 6 people in your team and trying to raise your seed round. This is absolutely not what you want to do. So this is the huge benefit of when you see a financial service that you want to add, you go out to a fintech and you figure out how you can add that into your platform. And you can do this fast, you can do it cost effectively. And the cool thing is, since you're building on an API, you can just plug it into your existing designs, your existing UI, your existing user experience flows. So there's a lot of upside to this with none of the downside.
Hello everyone, my name is Victoria Scholtes and I'm the founder of the Scholtes Institute. Startups fail. And if they fail, most probably they are failing because they don't have the thought out and proper channels for payments and banking.
Hello everyone, my name is David Varsimashvili. Compliance is no longer a side function. It's a core operational requirement.
Hey, welcome everybody. I'm Marcia Klingon-Smith. Instant Payments is transforming the way money moves all across the globe, across all the different industries.
Let's talk about the responsibility a bit here, that where does the responsibility end for the startup and where does the responsibility start for the fintechs when it comes to protecting their users, the data, and obviously, filtering out all of those bad actors, what the compliance department is supposed to do. So what do you think? These lines are a bit blurred, or it can be really clear that yes, that's the responsibility for keeping the data, having all the information secured, and also, run the compliance. Maybe part is going to be run by the company, and then financial compliance is going to be run in the financial institution. What are the essential measures that these startups can take for this?
Well, it will depend on the service and the provider, but there's always going to be some sort of obligation for you to know your customer and to understand what they're doing. The benefit of working with some of these fintechs, well, I give all of the fintechs or any fintech, is that they are going to be doing this layer of transaction monitoring to make sure that whatever's going through ultimately through their platform and under their license is compliant and isn't breaking any rules regarding anti-money laundering, terrorist financing, or any sort of malicious activity. However, they will ask you to stay on top of that and to control that because ultimately you're facing those end users. My suggestion is that if you're building out a financial product like this, if you're a fintech, if you're not a fintech, you want to sort of think like a bank at this stage. not in the sense that you want to be slow or you want everything to go through 6 different committees before you change 2 lines of code, but more in the sense of the way that you're approaching your relationship with the management of this customer data. You want to ensure that you are following the compliance guidelines up to a reasonable amount that's expected of your provider. So you're really getting to know your customer better, following these anti-money laundering and KYC rules or KYB rules if you're B2B, doing this sort of onboarding, because even if you're not obligated to do so, you're ensuring that you're not only keeping your platform and your users safe, but you're demonstrating to the regulators upstream that you take this very seriously. And I think a really good example of this is if you look at the evolution of some fintech, some consumer-facing fintechs. For example, Revolut, I think they're the second largest neobank in the world, behind Nubank in Brazil. But Revolut, when they got started, their whole thing was, well, we're just a payments card for travelers. Very simple value proposition. And they didn't go out and get an electronic money license or even a banking license. That's a whole other story behind that. But instead, they built on top of an embedded finance provider in the UK that allowed them to have these virtual accounts and payment cards. So they're able to quickly get up to speed with a banking like product, a payment product. This enabled them to test the product, go to market, create this MVP, and grow. And only once they had pretty much validated their concept did they say, all right, well, now it's time for us to get off the embedded finance provider that we're working with and get our own licenses. And they started off to get an electronic money license, which allows you to make payments and to hold customers' funds segregated. You can't pull them together and lend them out. There's some other technicalities behind it, but it's enough for them to really take control of that stack and to take those costs that they were outsourcing through the embedded finance provider and bring it in-house and to improve their margins a bit. But if they had done this without thinking like a bank or thinking like what they needed to do to get there, it would have been much harder for them to get that embedded electronic money license. So it's this ability to think, well, all right, well, where am I going downstream on this? Where's the end journey? Is it for us to have our own license? If that's the case, then you really want to get those compliance controls and that mentality set up in shop sooner rather than later. So you can make that stronger case to the regulators, and you can also ensure that you're really doing your maximum to protect your customers' data. Because again, a data breach in any industry is going to be bad. If you're talking about a data breach of people's personal financial information, that could be catastrophic for your brand.
Yeah, it doesn't get worse than that, right? And that's why I think the financial institutions now have to deal with DORA in the EU to make sure that all of those security standards are in place and everything is being kept. You're testing all of the security systems, so at least it defends the customer data. Exactly. But when we are talking about fintech solutions, what do you think? How can they improve treasury management as well, including the cash flow forecasting, risk management, even payment, which is not a treasury management function, but how these fintech solutions can improve dealing with the money and the payment flows internally?
I love this question because I got my start in fintech in a B2B fintech focused on corporate finance, focused specifically on currency risk management. And if you look at any treasury department or any finance department, they touch pretty much every part of the business. And that can be anything related to expenses, anything related to R&D, anything related to inbound cash flows, anything related to managing the money. And this can be an absolutely gargantuan process, depending on what you're trying to improve or where you have these pain points. There's probably a fintech solution in place. We could go through a couple different examples. So let's say that you are having to pretty much handle the reconciliation of all of your customers' transactions on both sides of that transaction. This can take tons of times. I've done some consulting work for a couple of these payment platforms, and really what they see is that, well, treasury departments will be putting 2 people full-time on this as their job to just manage these payments. This is 2 full headcounts of financial experts. When they go out and say, well, how can we solve this? How can we save these people from incredibly tedious and actually risky work because it's a manual process? Well, an embedded finance solution could actually solve that, because instead of reconciling off one big ledger, since every user has their own dedicated account, it's incredibly easy to get those insights to see when there might be a break in a payment, or to see if everything is going as quickly as possible. And you can apply this to almost anything in the corporate treasury. If it's something like doing liquidity management? Is it managing international payments? Is it looking at your global position? Because smart companies will create multiple bank accounts for their different business activities, and international ones will have these accounts all over the place. So using something like an open banking provider would allow you to aggregate all of those accounts into one dashboard. So again, you're not sitting there when you're trying to get a global snapshot of your balances and opening up 5-6 different bank accounts and going through the authentication process, and even doing things like downloading different spreadsheets and trying to reconcile the data, or not even reconcile it, just standardize it so you can read it. Instead, you can look at some of these open banking providers and plug that into your system and just get an immediate view of what your finances are. Everything gets standardized behind it. And a lot of these solutions will also plug into your enterprise resource planner, because again, this comes through API, which makes it incredibly easy for your tech teams to incorporate it. Now, obviously, you probably look at this if you're a little bit larger in a company, not as much of a startup. But again, like, these solutions are all over the place. And to just clarify that, you wouldn't look at the API side into your ERP until you're a large company, but even the smallest startup can use some sort of fintech solution into their treasury to manage their finances. An easy one is Wise, what used to be called TransferWise. If you have international bank accounts, well, they have corporate accounts, and you can quickly open up one, and you can handle your currency risk in there, your currency payments in there. You can get a global snapshot of your wealth. You can even use some of their sweeping functions to put your money into the money market. Again, this is great for small businesses, and there are solutions at literally every step of the way and for every size of the business inside fintech for treasuries and corporate finance.
I remember back in the day, our currency management was give a call to the bank, say how much money you want to exchange from what currency to what currency. Wait until the banker gives you a price. Don't accept the first price. Ask again and accept the next price. And basically, that was the procedure. So there was no thought process behind it. There was no evaluation if the price is legit or not. We didn't even think about using any kind of specific providers for that specific purpose. It was just a high street bank and the banker who was just giving us two numbers, and we automatically accepted the second one.
Shouting out towards his trader across the desk to see what price he's going to get on the trade, and then marking it up. Which, that's the other side. They would mark it up handsomely, so that was money you're losing. And 1% might not seem a lot, but if you're 1% over $1 million, that's not small money.
Exactly. And it's just scary to see that how many companies still rely on that bank account that they opened 20 years ago when they were much smaller. Obviously, the environment was different, regulator was different, their own volume and activities were completely different, but they still trust that banking provider for every single financial product and all the needs. And I think it comes down really about education, of understanding that, wow, there are other potential opportunities out there, and there are a lot of innovations that can help me. But I think whoever is making those decisions on payments and banking today might not be even aware of the existence of these fintech partners and the providers and the products out there. So if you're a treasurer for the last, let's say, 40 years, how do you know that there is something out there, and how do you know that it can benefit you if you don't get to start the search on your own? Is there any way? And of course, how do you pick out your vendors? What do you do to make sure that whoever is handling your funds is legit and they deliver what they promise? Mainly here in the fintech industry, there are so many different providers popping up like mushroom after a rain. You don't know who to trust, who to avoid, what is their license they are operating under, how are they handling your funds. So in your opinion, what are the best practices for these vendor selection and obviously making the due diligence when choosing a fintech partner? How do you get the information from external sources? How do you know that you're doing your full due diligence properly when you're picking a person or a company, or trust anyone who is handling your funds?
First, it really depends on how far you are in your research. Some fintechs have been really good at their content marketing. Maybe this is my content marketing side coming out, but they've been quite good at least like hitting that pain point, and you can browse their website. I would note it down. I don't know if I just from clicking on one blog post to going to contact us now and signing that contract. That's amazing from an acquisition point of view for the marketing department, but I would probably advise against doing that. But yeah, that's one level. Another level is if you go to trade fairs, usually fintechs are at these, the ones who are trying to target your service. They should be there. The smart ones are there. Do your research on what that pain point is. But before that, you're really wanting to define what that pain point is. And that goes down to talking to all the stakeholders. If it's an internal one with your treasury or finance department, really drill down and see where that root cause of that pain point is. And then from there, you're going to start doing this research. If it's that Google search, if it's at the trade fair, ask your peers. Again, like this is the benefit of having a dynamic ecosystem in your local operating city or wherever you are. Go out to these events and talk to people. You might learn what they're doing to improve their services. But once you've really gotten it narrowed down to a few providers, there are a few things you're going to want to look at. First, you want to make sure the product that they're offering actually does a lot of the content that you'll see. It will vary between very technical or it will be something very high level. Ideally, the content that you're looking at is more technical, but if you really want to understand what a fintech or any software as a service provider does, you're going to want to open up the docs under the read the docs section and see exactly what those tools do. And in this case, if you're not really proficient in technology or reading coding, you're going to want to bring in someone from your product department or even someone from your IT team and go through this together. Once you've decided that you want to explore a fintech product, this needs to be a collaborative effort. So if you're you're someone in the finance department exploring this, bring in your peers from product, from the IT department, so you can all read through this together, because it could be that the service you think is amazing, their website is just promoting they're going to solve all your problems. But if you look at the document itself, well, maybe it doesn't actually do what is advertised. So you really want to make sure that the technology behind it is delivering your solution. Second, and Victoria, you touched on this, and it's absolutely important, is like, well, how do you know that they're legit? This is a totally valid question and something anyone should be looking at, whether you're a retail investor, retail consumer, early stage fintech, or a startup or a massive company. Where are these people registered? What do they do? Fintechs, any regulated financial services company has to disclose their license and who regulates them. If they don't have that information on their website, or if they've buried it somewhere, you turn away, don't follow that one up. That could be a scam. You can always look them up on the regulator's website. You can look up what they're actually authorized to do, what sort of services they can provide, if there's been any complaints or any rulings against them, any sanctions put on by the regulator. You have this information in front of you. It's an absolutely incredible source. I even recommend that to retail investors who are trying to figure out if a provider is legitimate or not. Well, go find out who regulates them, get that license number, and you can see exactly what they do. So this is the same thing you should be doing if you're a finance department trying to find a fintech solution. Go see who regulates them. What are the layers between you and the regulator behind it? There can be situations where you're dealing with a reseller. It's not very common, but it could happen. So you really want to make sure that everything from start to finish is transparent.
Exactly. And you even want to get involved your risk department as well, because how to diversify the risk when we are trusting this provider, which we have never worked with. There could be multiple points of failures. Maybe the software is just not delivering. Maybe their license gets revoked in a couple of months for some reasons that we cannot do anything about. So there could be a lot of different moving parts as well that can affect you and your funds, obviously. But yeah, it is a very, very complex procedure. And as you said at the beginning, that payments and banking affect so many other aspects than just finance that you need to take care of. And you need to have someone who understands internally within the company to do what to do and how to build that strategy, how to understand that what do you need in the future, how to do scalable, for example, solutions, how to find providers who are good for you tomorrow as well, not just today, right? So there are a lot of different questions around that. Let's move forward. What do you think? What are the key performance indicators, these KPIs that finance professionals should use to measure the return of investment of their fintech investment. So let's say you found a great partner, APIs are clicking, you agree on everything, life is good. But you just need to justify that if you are integrating them, let's say I have 6 months and the technical team is already up to here and it takes a lot of time and effort and energy to integrate them. How do you justify what is the return of investment on this selection? What do you think? What are the most obvious KPIs in this case?
Well, if your inbox doesn't blow up with internal partners up your throat about what sort of torture you just put on them, that's already your best indicator. Again, this goes down to the previous part we were talking about, is make sure you get the right selection and the right, for the right problem you're trying to solve. But ideally, we'll go down to what you're trying to do. Is it a pain relief function? Are you trying to solve a pain point? Are you trying to provide a superpower to your users? Are you trying to enhance, to deliver a gain to either your users or to your balance sheet? And really, whichever one that is, you're going to look at that metric. So the pain point one, for example, let's take the embedded finance example we were talking about, where you have this marketplace, and before you were reconciling transactions manually, that was costing you, 2 headcounts per day, per week, full-time jobs. And the idea is like, well, with this new embedded finance provider, we're going to go from having 2 people on this 40 hours a week to maybe 1 person 3 hours a week, just to make sure the books are going on. Well, if that's your measurement, if this is how you're going to measure that, then, reduction in headcount, cost savings in that front, that would be the good KPI you're looking at. If you're looking at something that's going to maybe supercharge or provide a gain, such as maybe a new revenue stream, well, what did that revenue stream deliver? Did it deliver as your hypothesis as the product manager? That's, well, hey, maybe we're going to start opening up, like, let's take a marketplace, for example, where we sell embedded insurance. So you can take an insurance product to maybe guarantee the shipment of that service, and you can get a commission from selling that service through the embedded insurance provider. Well, did this thing actually deliver on the pain point? Are we actually making money on this? Or is the cost that we have involved from just the operating, the license, the startup cost of incorporating that into our platform and the ongoing fees, is that not worth, is it not making its return on investment? So you really want to make sure you think like a scientist in this point. And this is something like startup founders are really good at, or the really good ones are. It's like you have a hypothesis, you have the metric that you want to measure, you based on whether you're trying to save money or make money, and measure it from there. So I would look at the cost overall and the revenue stream.
Right, and as you said, that there are a lot of stuff that you can measure, right? For the KPI, there's the number that you can see on your bottom line at the end of the year, but also so many things that you can't measure, as your inbox, which is blowing up, the number of heart attacks of the management.
And if you're at lunch and you go to like the kitchen and everyone leaves when you walk in, you might maybe go work remote for a little bit. So.
True. I think that there is also one important aspect that we didn't really mention. What do you think about this single point of failure by relying on an external company with your operation? Because the main part of your activity is to show this to your customers. Obviously, they benefit, everybody benefits. Although this is not your company, you don't have a full control over what this third-party provider is doing. And of course, you do everything. You make sure that you do the due diligence and pick the right partner. But there is somehow, I feel that there is an inherent risk here to trust with a third-party provider majority of your operation. What do you think? Is there any way to reduce this risk? Or maybe you need to plug in 2 different providers and then switching between them, as we do, for example, with the payment gateways, right? So if one card doesn't go through with this provider, this switches over to the next one. With these fintech companies, what do you think? Is there any way to avoid this single point of failure kind of massive risk, which is just lingering on top of your organization all the time?
That's an excellent point, and it's absolutely crucial. It really depends on how critical that financial function that you're plugging in to is to your operations. Ideally, you have a plan B ready to go. This would be part of your risk management strategy. So if you're doing embedded finance, there's generally more than one embedded finance provider in the jurisdiction that you're operating in. So you want to have that fallback plan in place. I would not suggest going out and burning your bridges with salespeople, but rather keep that door open, because it could be that at one point, well, maybe your provider fails. These things do happen. What does that mean for you? Let's say you have this embedded finance platform where all of your customers' money is sitting on their accounts. Well, what's the abilities or the options for you to migrate that to a new platform provider? How can you get back up and running quickly with a new provider? And again, this would be an exercise you want to run not only with your risk team, but with your IT team to have something in place. You do want to do this research and do your due diligence. And it's not always easy. Two examples come to mind. Wirecard, the German embedded banking, or I think banking as a service provider, as they branded themselves, they had promised to revolutionize the way that you could use banking products. Well, it turns out they were completely fraudulent, but no one would have known that because it was the CFO cooking the books. That's a very hard risk to mitigate. But if you had a plan B in place, because there were other providers, you could have at least moved on to another provider quickly to ensure some sort of business continuity. So again, it's up for you to do this sort of due diligence on there, knowing that these risks are going to exist anywhere. You could have a bank fail, so your banking partner could also go into insolvency or into administration. Again, it's the same sort of plan B. Well, if my bank fails, what's my plan B? What you should be doing is having multiple bank accounts at different institutions. It's worth keeping those relationships open with other providers. Now, if it's more of an information-driven thing, let's say that you're using an open banking provider to understand where all of your accounts are, to aggregate all that information. If that goes down, that would be a pity. But it's not the end of the world, because you can still access the underlying information, going back to the good old-fashioned logging in to the banking portal, reading the balances and the transactions on their dashboard, or downloading the spreadsheets. But again, you don't want to, as soon as you launch this new treasury management system where you have all of your bank accounts aggregated into one shiny dashboard, you don't want to trash the Excel sheets and those macros that you created in some sort of celebration. You want to keep those kind of in the back burner just in case things go down. I think this really goes down to any sort of contingency planning in a business. Always have a plan B in place. The beautiful thing about APIs is it's fairly easy to switch them out with each other, but it is far easier than having to build up a solution from scratch.
Right, yeah. And obviously your internal solutions can also fail, right? So it's just as much as an inherent risk that getting some third party failing. Everything is changing all the time. Your company is changing, your volumes are changing, your requirements and needs are changing, as well as the regulation changing. Your fintech partners are changing. They are coming up with new technological innovations, making your life and obviously all of their customers' life easier, quicker, safer. So I feel like just by setting up a strategy, a banking and payment strategy to understand what do you need and how do you serve your customers is not something that is going to stick with you for the next 10, 20 years. And it shouldn't. So how these finance professionals who are making this decision foster a culture of continuous improvement and stay up to date with the latest trends? Because as we mentioned, there is a lack of education. There are a lot of information out there, which is getting lost in the sales pitches. We are the safest, pick us. We are coming up, new things are happening, but it's not necessarily ready yet. So what can you do to convince the whole organization that, yes, you need to rock the boat. Yes, just because we do it for the last 5 years in this way, we do need to change. We need to always look out for new partners. We need to always look out for new improvements, changing the strategy and whatnot. Is there any way that we can build this somehow in the culture? Because people just don't really like to change something which is working. It's okay. We even get some revenue after that. Why would I go out and look for the competition of my good, trusted partner for the last couple of years?
So, everything is about evolving or dying. And that's no different for a company than financial services, than anything in life. So it's always good to stay on top of the trends. And what, right now, maybe you found the optimal provider for what you need to solve. Right? There will be entities and people and innovators competing with that service, trying to do it better or cheaper or both. And it's always good to keep an eye on that, because maybe down the road, it would make sense financially to switch. in addition to that, as technology changes and evolves, and again, we haven't talked about AI, I don't want to touch into that, but it is one of these things that is changing right now in financial services. But how do you stay on top of that? And you just need to keep yourself informed about what's going on, as well as to just keep your general knowledge. I would recommend, in terms of just staying up to date with what's happening, is to follow and even subscribe to different industry newsletters, different sources dedicated to talking about financial technology, or then talking about whatever you're trying to do in your sector. There's a lot of corporate finance publications out there that will talk about these sorts of activities and these sorts of innovations. It's really good to stay on top of that. Maybe there's a fintech solution that you could add and put into place. I think that's really one of the better ways you can do that. But more importantly, and you talk about fostering an internal culture, I'm a huge fan of continuously learning and education and just improving your knowledge. At Broaden, we have a dedicated Slack channel where we just share our insights and anything related to financial news. We have an internal wiki where anytime we learn something from a customer or part of our work, we document it to keep us up to date. My accreditation is with the CISI, the Chartered Institute of Securities and Investment in the UK. And one thing I love about having that is I have to do at least 10 hours a year of continuous professional development, CPD. And it just allows me to expand my knowledge, and there's a whole catalog of things I can look at. But that's more on the investment side of things. And if you're really focused on the payments side and really focused on the corporate treasury, you could look at a service that can provide that for you. And keeping those CPD credits up and continuing your learning is an absolutely amazing way to do this, because you never know what you're going to learn that will make you think and get that innovator inside of you going. Then everyone has that inside them. So this just continuous education is so crucial, not only for yourself, but for your organization, and the ability to share these insights with your colleagues.
And that's exactly why we have a lot of CPD and CPE courses here in the Schultes Institute as well. So all of our courses are obviously CPD accredited. So we are EU accredited. So that's the way of actually giving back to the community and talk about these things as we talked about today, that we need to raise awareness and we need to find new ways of educating people. And as you said, the fintechs as well as the users, we need to come closer together and then discuss all of these problems, because that's the way that we can improve and get further and innovate in the right way. So is there something that you feel strongly about that we failed to mention? Is there something else that you want to add?
Always keep an open mind. If you're thinking innovative, it's great to dream. It's great to have this vision, one step at a time, especially if you're a founder in the fintech space. I speak a lot from this perspective. The initial idea for Broaden was to be a investment advisory with robo-advisory services, so a broker and an advisor underneath. And I thought, I'll just raise a couple $100,000 and get the license just like that. Did not work that way at all. A lot of this is what I learned from experience. And again, things have evolved quite a lot, but I just always keep an open mind on this. Always be learning. Find resources that are experts in the domain. If you're looking for payments, I think Victoria's the person you want to talk to about this. We've done some stuff before with the fintech community, and we've chatted about this stuff, and it's always great to engage in those sorts of conversations. If you're in Barcelona, come check out BC and Fintech. If you're where you are and you're really interested in getting into the space, find the community, because that's where you're going to build your knowledge and those connections behind that. And they're going to help you take that next step. And then you tie that in with some good CPD and with some other consultancies who can help you grow and really deliver that and make sure that you are on the right path. Always get the expertise and the help that you need. Keep an open mind and keep learning.
That's right. And it doesn't cost a lot to ask for help at the beginning and get it right at the beginning, but it can cost a lot not to have it when you eventually need it. And when you're in trouble somehow, it's always more expensive and it's more complicated than if you could have sorted this out at the beginning.
A little bit of upfront cost will save you a lot of money in the long run in this case. And it goes for your payment experts, it goes for your lawyers, it goes for your own mental well-being as a founder, as a product developer, as a finance lead. Don't hesitate to seek out experts at the beginning.
That's right. Well, thank you so much, Elliot, for being here with us. We put the email address on the screen, but please let us know that where are you active, where can we find you, and if someone has further questions, recommendations, or comments, where do we find you, how we can reach to you?
I probably spend too much on LinkedIn than I should. I try to justify that as part of my business part. No, I'm most easily reached on LinkedIn. As a founder and a person running a fintech community, I kind of have to be there. Yeah, feel free to send me a connection request. If you're interested in what we're doing at Abrana, give us a follow there. If you want to see what we're doing in BCM Fintech, BCM being Barcelona, the airport code, follow us on our LinkedIn page. We have updates and insights about what's happening here in the fintech community. We do job postings. So if you're looking for a career change, this is there's a lot happening here. So, we post, I think we have 680 openings that we posted yesterday.
Oh,
on
wow.
fintech jobs in Barcelona. So, there's a lot of opportunity to come down here. You want to do a startup, you want to do something in fintech, I'm happy to tell you my 5 things to do and my 50 things not to do.
Yes, it's always good to learn from someone who has been there, done that, right?
Exactly.
It's great. Well,
expertise is key.
Always, that's so true, and I'm so grateful that you shared your wisdom with us and spared 1 hour of your time to discuss all of these important parts with us. And I think that's what we need to advocate for, to have a more ethical and transparent industry, to advocate that the fintechs are out there, and we need to make sure that we utilize all of those new innovations, which is giving to us startup founders as well. So thank you so much, Elliot, for being here with us. I would like to encourage everyone that please write to us, comment, give us some real life problems or tips or hints of how we can proceed further. What are the other topics and subjects you would like to discuss? And please don't be shy. Reach out to Elliot as well on LinkedIn, because I'm sure that he would be happy to reply to all of you. So thank you so much for everyone who was here with us today. And thank you, Elliot.
Thank you. My pleasure. Have a wonderful day.
Hey, welcome everybody. I'm Marcia Klingensmith. Instant payments is transforming the way money moves all across the globe, across all the different industries. A recent study showed that 42% of instant payment transactions actually happen on the evenings and weekends. About $200 billion is currently locked up in the European financial system today. And instant payments really can help unlock this liquidity. The future of finance is instant, and those who adapt will thrive.